Hello! Can stock market experts accurately predict which stocks are going to outperform and which are going to underperform in the month ahead? So that's the question I'm going to answer in this video. My name is Jimmy Lepping. I'm a psychologist and statistician with an interest in research in a range of topics, including the financial markets. One of the topics that I have content on my channel is the financial markets. In fact, I did a video on this exact question just over 2 years ago, where I reached a certain conclusion, and then I thought, well, okay, just fast forward, let's just have a more recent time window of data and address the same question, right? So the question of today's video is, can stock market experts accurately predict which stocks are going to outperform or underperform in the next month? So here you see a link to an article which is related to that question, because what I've done is so I'm an investor myself, a stock market investor. I don't listen to experts for my investment decisions. I do my own research, which is, by the way, it's not to say that you should do the same. And this video is not intended to be used for investment or trading advice, but it's just to show a little bit of, okay, what can you do with your own research? What is the kind of conclusions you could draw? And both this picture and this link are from a source that you can find online. In fact, if you click on this, if you use this article link here, you will get also this image which shows buy and sell. Because while there are different pages, and I happen to use an example from the Amsterdam stock market, because that is one of my key markets. I'm based in Europe, and one of the main stock markets I invest in is the Amsterdam stock market, mainly large and mid caps, although sometimes also small caps. And also not just in the Amsterdam market, also in other markets, you find people who make predictions regarding which stocks are going to out or underperform in the next month. And sometimes that is the like message like this. Okay, two surprising newcomers on the list of stocks to buy according to stock market experts. And sometimes the title is also, okay, according to the experts, you should buy X and you should sell Y, or you should buy this stock and you should avoid the other stock. So of course that kind of titles and also recommendations in such articles are based on the expectation that these experts can, or anyone making these predictions basically, can accurately predict which stocks are going to outperform and which are going to underperform. Because, I mean, you don't want to be buying stocks which then the month after underperform, or in the worst case go down in value, in price. And you don't want to be selling stocks either, which then the month after appreciate a lot in price, right? You want to make the right decisions, not just any kind of decisions, because, well, you might as well toss a coin or do something else. So here you see a table of like the table that you find in this kind of article. So in this case, the link is found here. This is where I got the table from. So what happens here is that this kind of tables is the result of a panel of experts. It's a group of experts. They are not mentioned by name, by the way. Just usually it's a survey to which 10 or 12 or 15 experts participate. Sometimes they give the number, sometimes they don't. But it's a group of stock market experts that answer the questions which stocks are going to outperform, which is here on the left, toppers. So the toppers are the ones that are expected to outperform. And on the right, the so-called floppers, or stocks that are expected to underperform in the next month. And well, this is done over only the large cap stocks. So no mid cap or small caps, which also tend to have less coverage from analysts than the large caps. Generally speaking, it's not always the case, but generally speaking, the large caps have more analyst coverage. So you have these experts making predictions, which ones are going to outperform, which ones are going to underperform, and then the month after, you have here what is called rendement, which is the performance on a monthly basis. So in this case, ASML, for instance, was at the end of October of 2020. End of October 2025, it was predicted to outperform in November, yet in November it got a minus 1.6% performance, so it went down 1.6%. And by the way, these numbers here include dividends and capital returns. So the total return you would get if you held that position for a month. Wolters Kluwer was also mentioned as a topper, but had a minus 13.5% performance. DSM Firmenich plus 0.1% and KPN minus 2%. On the other side, these are stocks that were supposed to underperform in November, as per expert predictions at the end of October. And yet we see for Philips, for instance, plus 3.1%, ArcelorMittal plus 12.1%, Heineken plus 4.7%, and the list goes on. There are some minuses as well. But as you see, if you compare the 4 stocks for this month that were tipped as outperformers, and you compare that to the list of underperformers, predicted underperformers, actually it looks like their performance is pretty similar. There are pluses, there are minuses, and so this is for 1 month. What I did is take, of course, more months of data. I will show that in a minute which ones. But yeah, the core question was, can these experts really predict which stocks are going to outperform and which ones are going to underperform in the month ahead? So this is not a conclusion about individual experts. That is important to mention that, because the data that is publicly available on this site is just aggregated data, so for a group of experts. So if in that group more people recommended something as a topper, so outperformance, okay, then it would go in the outperform list. And if more people in that expert group mention something as a flopper, so underperformer, then that stock would go in the other category. So this says nothing about individual experts. It just says something about the performance of this group of experts in this survey. And what I did, I took a sample of 13 months, all the way from, let's see, January 2025 until January 2026, the last month also included, so all 12 calendar months of last year, 2025, and the first month of this year, because as I'm shooting this video, it's the 9th of February, so February is still underway. And so 13 months of data. When I did the other video just over a couple of years back, I had I think all data from 2021 until almost end of 2023 from the same source. So yeah, that's basically, this is also a way to see if the performance of this group of experts has improved, right, compared to some years ago. So I took 13 months of top, outperform and flop, underperform predictions, 68 of that resulted in 68 flop predictions and 67 top predictions. So 68 times a stock was mentioned as, okay, this is going to underperform, and 67 times stock was predicted to outperform. And when you look at the distribution of the actual performance in the month following, so the month for which the prediction was made, you see that so the blue distribution is the distribution of performance for the stocks that were categorized as flop, so underperformance. And then you have top, which is predicted outperformance, has a distribution which, well, okay, doesn't look exactly the same as the blue distribution, but it looks very similar. And when you look at the descriptive statistics here, you see that the mean and the median, which are two measures of central tendency, they are actually slightly higher for the flop category than for the top category. So there is, from this descriptive data, no evidence to suggest that the stocks that are classified or predicted as, okay, these are going to outperform, actually outperform the month ahead, right? Because you say on average, the flop stocks actually do better. Okay, it's very small differences. There are huge standard deviations around it, of course. You see here also minimum maximum. There is a strong dispersion. Here you see a slightly different visualization of the distributions. Well, it's fair to say that they look very similar. Now, when we look at, for instance, the performance for each of the 13 months, so horizontally we have months 1 to 13, because we had all months from starting January 2025, ending January 2026, that is this month here. And then you look at the performance of the predicted flop and predicted top. Well, you would need a microscope to tell these lines apart, and when you do take a microscope, you see that the flop line is actually slightly higher here. Now, of course, this scatter plot doesn't look very linear, so what if we take, instead of a linear regression approach, we take a Lowest regression approach, which allows for non-linearity? Well, again, we see that there are areas here where where the top performance here top performance is slightly better, but you also see an area where the flop performance is better. And on balance, well, sometimes one, sometimes the other, but on the trajectory of 13 months, you see little difference. So what if we do some statistical tests on these distributions? Well, first of all, we can pretend that this data is, well, it's not exactly normally distributed, but the distributions are fairly symmetric, don't have very extreme cases. And so we do a t-test on these distributions, and then we find, among others, a Bayes factor of 0.194. This is the Bayes factor of the alternative hypothesis that the means are different versus the null hypothesis that the means are equal. The prior distribution is a default Cauchy distribution. You see here the link to the program that I used, Jamovi, version 2.7, and Jamovi uses a certain Cauchy prior distribution. If you want to read more about that, there is a lot of documentation on what that kind of prior is about, and why such a prior is chosen. But basically, the Bayes factor indicates that after seeing, so because this is the alternative versus the null, so the Bayes factor for the null hypothesis versus the alternative is the inverse of this red number, so that would be just over 5. That is to say that after seeing the data, the null hypothesis of equal means is just over 5 times more likely compared to before seeing the data. So seeing this data has made the null hypothesis considerably more likely. Another way to look at it is to perform a non-parametric test if we are not willing to make assumptions about the symmetry or approximate symmetry of distributions. Well, then we just do a non-parametric test, and one test that we can use is the so-called Brunner-Munsell test. Again, I have several videos on this test on my channel. What this test calculates, among others, is a relative effect statistic, which you find here, and a 95 confidence interval around it. When this interval includes 0.5, And that means that the null hypothesis of no difference between distributions is in that interval, which means we cannot reject the null hypothesis of stochastic equivalence. Now, this point estimate is also close to 0.5, which in this case indicate what is the chance that a score in the top distribution outperforms a score in the flop distribution, or in plain language, what is the chance? So you have here 67 top performance and here 68 flop performances. You compare each flop performance with each top performance, you get distributions. And what is the chance that a randomly drawn top pick outperforms a randomly drawn flop pick? That probability is below 0.5, which is to say it's actually more likely that a flop performance outperforms the top performance, which is to say, well, actually, we have no evidence of accurate out or underperformance prediction. That is important because it's important to when you make investment decisions, it shows how important it is to do your own research and not just listen to one survey. The fact that one survey says something, first of all, if that is a survey, if the data that is presented is an aggregate of a group of people, that says nothing about the individual experts, which is, I reiterate, it's very important to say. These outcomes say nothing about the capability of individual experts to tell which stocks are going to out or underperform, although there is literature, and actually literature dating back quite a bit, which shows that it's actually really difficult even for experts to accurately tell which stocks are going to outperform and which are going to underperform. But certainly this kind of findings demonstrate the importance of not just basing decisions whether to buy or sell something on a simple survey where some people said buy this, or where the outcome of the survey says like, yeah, you should buy this, or you should sell that, or you should buy this, or you should avoid that. It's important to do your own research, and well, this can definitely be part of that research. But personally, if I was to listen to experts for investment decisions, I would be more interested in reasons why they think that something's going to outperform. I mean, when I make my own decisions based on a combination of fundamental and technical analysis. Fundamental, on the one hand, well, I closely follow earnings update, outlook updates, also earning calls where I regularly tune in. So I basically look at the financial fundamentals of a company. Is it profitable? What is the outlook for the next quarters? How is the sector doing in which this company is moving? Because there are different sectors, that may have different headwinds or tailwinds in different times. So that on the one hand. On the other hand, I also do some technical analysis, which means I look at trends in the charts. So I look at a combination of things, but I definitely wouldn't base my decisions on a single person or a group of people say, okay, now next month you should buy this or that because this is going to outperform and that's going to underperform. Unfortunately, it is difficult to predict which stocks are going to out or underperform in the month ahead. Anyway, I hope you find this useful. If you find this interesting, I have more material like this on my channel. So you will, when you do a bit of search, you will find more of this. And I hope you found it interesting. Thank you for watching. Thank you for listening, and hope to see you in a next video. Have a nice day.